You are listening to the Wealth Formula Podcast with Buck Joffrey. Get ready to change your life.
Welcome, everyone. This is Buck Joffrey with the Wealth Formula Podcast. So a few weeks ago, I got the chance to be a guest on the Simple Passive Cashflow show with Lane Kawaka. So today I am going to replay that interview with me so that you can kind of get to know me a little bit better. But before I go into that, I do want to let you know that I am planning to be at the Planning for Prosperity and Alternative Asset Symposium, which is September 29th and 30th, and that's in Lake Mary, Florida. And this is an interesting symposium, particularly for people who listen to this show, because as we've discussed, I am not a believer in the stock market and investing in mutual funds, etc. And if you have an IRA, you may not know this, you don't have to invest in the stock market. You don't have to invest in anything that your financial advisor, quote unquote financial advisor, is telling you to. You can actually go out and invest in a lot of alternative things like real estate, precious metals, etc. So this is a great opportunity for people who have some money in an IRA and who'd like to take advantage of the different opportunities out there and learn what's there. So I'll be there as well, and I'll be there primarily to potentially speak to investors about the types of things that I do, along with a few other colleagues of mine. So without further ado, I would like to turn this podcast over to Lane Kawaka as he interviews me on Simple Passive Cashflow.
Hey guys, it's Lane here with the Simple Passive Cashflow Podcast. I got a guest today, Buck Joffrey. He's from Chicago, Illinois. He's quite the high-level investor that I've met through these different workshops I've been to. How you doing, Buck?
Doing good. Lane, thanks for having me.
Buck, I don't know if you realize this, but, we had lunch that one day down there in Texas. Listen to your story, and you get being a high-level surgeon in your day job. You're quite the serial entrepreneur. And what I took away from our conversation was that paying for all this training, and you're trying to dig a hole, but you're not worried one bit about how much that shovel costs. And that was something that's really propelled me these last few months to kind of get the training that I need to reach my goals. So I thank you for that.
Oh, yeah, you're welcome.
So I've got these questions queued up. First question here is how much simple passive cash flow are you making today and how you're doing it?
Well, it's a good question. I mean, I think, and it depends how you define simple passive cash flow, right? So passive cash flow, I mean, as you know, I'm I'm also a physician. I work as a physician 2 days a week. Passive cash flow certainly make more than any other physician I'm around, just with my passive cash flow. So I couldn't give you an exact number, but it's substantial.
Good enough. Question 2 here. So I always talk about this Han Solo moment with my buddies. And as we all know, Han Solo from Star Wars, this guy was cruising the galaxy with his buddy Chewbacca. And they were just low-life smugglers. But their paths crossed with Luke and Leia, and they took this alternate life and took this pivot point. I guess, so when did you have this Han Solo moment? When did you kind of burn the boats and went off to this alternate path?
Yeah, so it's interesting. So the seeds were planted for this. I talk about this a little bit on one of my episodes on my podcast, and so I was a fairly academic guy in medical school, and then in residency. And residency kind of beat it out of me a little bit, and I started, not liking the hierarchical things about medicine and so on and so forth. And so it took a lot of, what I loved and started turning it into more of a job. And I started looking at other things, not seriously, but just trying to keep my mind open to other possibilities out there. And, I got, I finished my training in the, it was July of 2008. The next day I got married and we went on our honeymoon the following day, and at the airport, I picked up a copy of Kiyosaki's Cash Flow Quadrant. And for me, it was just an unbelievable eye-opener. And it wasn't something I was necessarily looking for, but here I was, this guy who was, a great student, doing all the right things, going through college, going through medical school, all this surgical training, etc. And I just read this cash flow quadrant book about different kinds of income and passive income and so on and so forth. And all of those concepts were so foreign to me. But so I started getting really into these books. But, I still ended up, I didn't do anything about it at that point. I was just sort of enthusiastic about the idea. And I took my first job, and I actually ended up being more in the cosmetic industry. And in 2009, about 9 months after I finished my training, I was making pretty good money in that first job. I mean, a lot more than I'd ever made as a resident. I was making like $50,000 a year in residency in San Francisco, which is pretty much below the poverty line there. But in 2009, we'd moved to Chicago. I was working at this place and making good money. And I had some significant differences with the management, and they just fired me. And I was like, oh my, what do I do now? And I was very upset. I was very emotional. I had this tremendous sense of failure. But then that lasted probably about an hour or two. And then I was angry. I got angry and I figured out, okay, well, I got to do something. So instead of sitting around moping, I worked diligently and crazy to open up my own shop. And within 2 months of that firing, I was up and ready and doing my own thing and basically sort of mimicking the business that I was doing. I was doing a cosmetic surgical thing, and it's all cash pay, so it's not an insurance pay, so it's a big risk. As a business, it's really, it's not like you're dealing with sick people who just come to you. I was putting all this money into broadcast media, which I didn't have money for, so television, radio, all this stuff. In short order, started to see tremendous success. So I would say that Han Solo moment, or whatever you're talking about, was the firing itself. And that is something that I've seen repeatedly amongst people who have actually gone on to be very successful, as they lose their footing. They lose, somebody fires them and all their sense of reality goes away for just a moment, and they have their crisis moment. So, you said the Chinese word for crisis is opportunity. And I think that that's what happened to me. Is I was primed for it. I got fired, and then I went and executed because I had to. Now I was married, and I had I think my daughter was about 3 months old. My first daughter was about 3 months old at the time. I had to at that point. I had no choice. And when you have to and you're motivated, that is a wonderful combination for good things to happen.
I get in the room with a lot of these high-performing individuals, and you get to know their story, and it's usually some pretty traumatic stories.
Yeah. And
there's a reason why they get to that point. And I also wanted to point out that for those of you who haven't listened to the Kiyosaki Cash Flow Quadrant, he talks about there's the entrepreneur, the business owner, the investor, and what was the last one there?
So there's self-employed. So there's the W-2 wage earner, who's the E, and the S is a self-employed business owner, who's your typical, physician, doctor, Dr. Lane on the wall. And then there's the business owner, who is basically a passive owner of a business who doesn't have to be there in order for the business to function. And then there's the investor, which is, just investing in, other people's projects. And obviously you don't have to worry about day-to-day activity there either.
Question 3 here. You might have answered it, but what's your worst life/business moment? And what did you do after? What was the lesson learned?
It's a continuation of the story early on. So now I've got this business that's up and started. I've never started a business before. By the way, I did hire a consultant for that first business to set it up, just on the nuts and bolts. I mean, I had no idea. How do you process a payment? How do you take a payment? I have no idea. Right? So I hired a consultant to just help me with those nuts and bolts. And I got this business up and started. And that was in 2009 and then early 2010. By the way, in the amidst, basically, the economy is kind of junk right now, right? So in the next couple of years, I had enormous success. I was making 7 figures and I was enjoying it. Thought it would continue forever. Bought a, big fancy house. Just thought it would keep going. And so with my business that I had, what I did is I said, my initial lease was only for 3 years. And so instead of renewing the lease, I said, well, I'm going to buy a medical building, take this building that was there and turn it into a great big medical facility and so on and so forth. So I was in the middle of that, and that was in 2012. And one of the major lessons here is never get short on cash flow just a few months before a national presidential election. So I was clearing a ton of money every month, and I basically dumped a huge amount of my savings into this whole project and in this building project to get the new thing going. So I wasn't liquid at all, and I didn't have multiple streams of income or anything like that. What happened was the re-election of Obama. What happens is that in a couple months before an election, pretty much people stop making decisions. That's a scientifically proven fact, actually, is that people tend to defer big decisions right before elections. So I went from, huge six-figure monthly profits to all of a sudden my overhead was so substantial that I was having huge monthly six-figure losses. And it was happening so quickly, and I was way over leveraged. Fortunately, I was able to survive. And, it reminds me of a quote, Lane, and this is a good one for you, is that the key to business is to stick around long enough until you get lucky, right? And that's, you'll just realize how true that is.
Right. Entrepreneurship is all about attrition.
It is. And so you stick around there. And what happened to me is, things started getting better, but I was never going to let that happen again. So now, as you know, I am very diversified. Okay. I've got multiple businesses in multiple industries. I have real estate. I have all sorts of things going, and I'm constantly trying to think of something different, completely different from what I'm doing. And that was the net result of that, of getting into that crisis, because I got caught with my pants down. I was in one industry, an industry where no one had to have cosmetic surgery, right? They weren't sick, and it wasn't insurance paid, it was all cash paid. No one had to have that. And all of a sudden I got caught with my pants down and I had income coming in from nowhere else. That was what propelled me to the next level, because I survived it. I learned from it, and then I went to the next level and realized what I need to do to try to make this not happen again.
So it really propelled you to diversify with your investing in different businesses.
Exactly.
So the next question here is, I always say that mark of a high performer is to put your ego aside and accept the help of others and join a mastermind. So the next 90 to 100 days, what's one of the bigger, medium-sized goals you got going on? Maybe people out here can help you out.
For me, I have, on the smaller side of it, I guess, or not the smaller, but the direct goals that I have are really, I have two startups, again, in different industries, including an assisted living facility. What I'm hoping to do in the next 90 to 120 days is to get them to be cash flow even, or at least one of them. And so that's what I'm focused on right now. The other thing is, as you know, and this is why we met at the particular seminar that we did, I've had a lot of success, made more money than I ever thought I would or could. I'm making probably 10 times more than other people in my profession. And for me, it's not just about the money. It's about the game, right? It's the game. It's entrepreneurship. I love entrepreneurship. So when you ask, I think you talk about, your number, right? I don't have a number. And that's why I don't know what my number is. Because for me, it's just an ongoing thing. I love entrepreneurship. I love to talk about it. I love to do it. I love new ideas. I have probably nearly 7 figures in passive income alone. It doesn't stop me from continuing to try to take it to the next level. But one of the things that I really want to do, and I'm working on the next 60 to 90 days, is to start using my own successes and start getting involved in offering other people an opportunity to invest in what I'm doing. So that's a big step for somebody. I've been a lone wolf up to this point, right? So And I've had a lot of successes. I've had failures. The failures have been more important than the successes because I've got some scar tissue along the way. And that keeps you safer than not having it. So I've had failures. You never want to invest with somebody who doesn't have a few failures. And so I want to try to offer that to people who are making a good income and who would love to be able to invest in something for a stream of income, but are unable to do so because, they haven't got the time or they don't feel like they can do it like you're doing. I want to be able to offer private investments essentially in a sort of a private asset management style. So, for example, looking at what I'm doing with assisted living facilities, I'm doing my prototype right now, and I have projections showing, pretty darn good returns. So the next time around, I'm thinking maybe I'll develop multiple ones of these and have investors involved, and I put in my money, they put in their money, and everybody comes out ahead. So using what I have, the successes I've had and so on, to sort of share the wealth, because that's a big thing for me. Is I'm trying to, with my own podcast right now, I'm trying to give back. I'm trying to teach people what I learned. I'm trying to encourage people not to be lemmings and just let the Wall Street and the stock market kill the savings that they have, and actually try to help people do better.
I have a lot of people come and contact me through my podcast and my meetup. For every 100 people that listen or I meet, obviously it's real estate, so only 10 people do something about it. And of those 10 people, probably about half of them will take the information that I give them and go buy a turnkey rental or whatever. But, for the other 5, they're like, oh my goodness, this is actually some work. And they resort back to the stock market and, become more sheeple that way. And I think that's great that once you've got a system down, that you kind of bring those people up with you and kind of save them from what's happening in the stock market.
Hopefully, I can get people involved and hopefully make them money the way I've made money for myself. And, for me too, when I think of investment opportunities, I think we make a mistake in thinking of only apartment buildings. The whole model of private equity and being an asset manager is about looking for opportunities. So I'm not focused just on real estate. I'm focused on different opportunities that I think are profitable. Right now, the reality is, as you mentioned, in many markets, Lane, right now, apartment buildings are not the best deal in town, right? So the people who are out there who are the rainmakers in terms of the financial world, the Goldman Sachs and the big traders like George Soros and Stanley Druckenmiller, they're all out of the market. They're not in the stock market. In fact, they're shorting the stock market right now. And essentially they're betting against it. Everybody I'm hearing right now who is a big player is betting that everything's going to go south. I think trying to help people understand that and save their own money, is a big service. And, I think you're doing that. So, I congratulate you on that. But I think offering alternatives is really important. So real estate's not the only thing out there either. I mean, you can look at businesses and you can look at agriculture, or you can look at a number of things that are very safe, tangible investments.
And I think you mentioned it twice, and just so that the listeners know, assisted living facility, it's I don't know if you want to describe that.
So when people think assisted living facility, and so if your listeners out there, if you have elderly parents, or in my case, I have this, my mother-in-law is in this assisted living facility, and typically what you think of is this big sterile box, right? This big building that was built in the 60s in a commercial district. I hate that paradigm because I think of it as almost exiling our parents.
It's in Happy Gilmore where he sent his mom and they put her to slavery to sew and do other things, right?
Right. And it's sad, right? Because these people are, most of them, depending where they live, of course, they live in homes and neighborhoods their entire lives. And then they get to a certain age and then they move across the street from a mini mall and they look at, it's terrible, right? And You get a bunch of people, even in the nicer ones, it's depressing. And I think there's tremendous amount of literature out there about how elderly people get depressed and they feel lonely in these kinds of facilities. So there's a different concept, which is to take individual homes and to convert them into smaller sort of mini assisted living facilities. So my recent project, or my current project right now, is the prototype of this. And what I'm doing is I'm taking a ranch house that I bought, and I'm putting a huge wing on it, and I'm turning it into a 16-bedroom assisted living facility. Now, the key here is that, first of all, it's small. It's going to have a higher caregiver to client ratio, or lower, I should say. And it is... And probably the biggest thing is it's in a neighborhood, right? So now you're not telling people, okay, you're done living in a neighborhood, go move across the street to, near the movie theater. You're actually keeping them in a neighborhood, trying to make everything seem like home still. And, you have a backyard, you have a big yard, we're going to put a garden in there, I'm going to put a vegetable garden in there. It's the humane thing to do, right? And it's the right thing to do. I think it's a great business model because it's a great business model when everybody wins. Because imagine yourself, your clients in these cases are often not the elderly people themselves, but the children. So if you're taking your own parents to somewhere to drop them off, wouldn't you feel much better dropping them off to a place that looked like a house rather than a facility or an institution? It's got great numbers too. The demographic is huge. The baby boomers are not going away for a while. So that's my latest project. So that's what I'm doing right now. I'm doing a prototype because I never like to, I like to first prove something with my own money. And then if it goes the way I think it will, I think it'll be a great opportunity for a lot of people to invest.
That assisted living is, out of everything out there you can invest in, that's really the can't miss one thing. I mean,
well, you can always miss. But I
just
think,
look at the demographics. I mean,
that's right.
So obvious.
The thing with the assisted living, and I think that you're right in that. I think if you execute right, I think you're in good shape. But you're also dealing with a very delicate portion of the population. And you got to be really careful. So you have to execute it very, very well. You have to look at these things as if you're doing it for your own parents. And sometimes that makes it's a higher, there definitely is a higher barrier of entry. So this may not be, this may not be ideal for somebody who has no business experience or real estate experience right away to do on their own. Although certainly it's been done. I'm sure, I'm not saying it can't be done, but I certainly wouldn't feel as comfortable in this space had I not had significant business and real estate experience, as well as, substantial capital to support it during the phase of getting people in there.
Right. But that barrier to entry actually makes your job easier at the end of the day. It's just similar how when I'm in the single family realm, I'm fighting with every Dick, Jane, and Harry out there. When I step up to larger deals, the competition gets a lot lower.
Yeah, so it's interesting you say that, Lane, because that's one of the major things that I've learned in the last few years in business is run, when you see people running in a certain direction, run the other way. And it's not because they're doing anything wrong. It's just that if they're, competition, if there's no competition, I mean, it's a lot easier to win, right? It's so much easier to win. In apartment buildings, you're talking about, there actually is a sweet spot. The problem you have is that these traders and these, Wall Street people, they know the stock market's going south. They know it is. So they're dumping a ton of money into assets, but they're not going to go buy they're not going to buy a single family house. I mean, Blackwater bought like thousands of them at once as a portfolio back in 2008, but what they're really looking at is those buildings that are above sort of the $10 million point. Smaller funds are looking at things in that 5 to 10 range. The sweet spot, in my view, right now in real estate investing is probably between $1 and $4 million. And the reason is that institutions don't care about those deals, right? They're too small. Syndications, it's actually a little bit small to do a syndication on something that's about $4 million. You agree with that, by the way? Yeah,
and that's kind of like that really small niche that I'm trying to fit in.
Right.
Yeah.
But then if you get below $1 million, there's a lot of private investors, individual investors who are out there, looking for deals. But in what you're doing by going between that 1 and 4 million is you're basically putting up a wall, because there's not that many people who can afford to buy apartment buildings or assets between $1 and $4 million by themselves. Below 4 million, it's hard to get significant funds or partnerships together to deal with anything that small. So you've got this opportunity, I think, in that area. If you can find investors, smaller investors, to get in, I think that's where the cap rates are going to be better.
Just below the institutional buyers and just above those rich individuals who don't play nicely with others.
Exactly.
One of the last questions I got is Tony Robbins identifies 2 large concepts that we're continually struggling to gain perfection in. The first is the art of fulfillment, and the second is the science of achievement. So, Buck, if you died tomorrow and these were the final words of wisdom, what is your secret to the science of an achievement and the art of fulfillment?
Art of fulfillment is to make your work something that you would do even if you didn't get paid for it. You want to make what you do on an everyday basis what you want to do, not because you have to do. And that's where having multiple streams of income and trying to make yourself more financially free is key. So I would say that. And the science of achievement, that's easy. The science of achievement is actually going out there and trying something. Okay, you have to go out and try to do something, and you have to make mistakes. We are programmed to learn that way. When we're babies and we're trying to learn to walk, we fall down, and then we get back up, and we fall down again, and then eventually we're able to walk. We don't get up and try to walk once, fall down and say, shoot, man, it's too hard, I'm going to stay crawling. We don't do that, right? But that's the way we become, because our educational system starts to spoon feed us. So the key is you have to push. You have to try new things. You have to constantly be pushing your comfort zone. If you find yourself not feeling uncomfortable, you're not pushing hard enough. So that, to me, is success into learning.
Dave Asprey from the Bulletproof Executive, he has young kids, and he always, after every day, he asks the kids, what did you fail in today? What did you go after? And he doesn't praise successes. He praises those failures. Anything we missed there that you'd like to leave with?
No, I think my advice to everybody is just to go out there and do it. Just try some things. It'll make your life more rich. It'll be more exciting. Never believe in the idea of a comfortable job, because it doesn't exist. Prepare. Just go out there and do your best and take some shots at things, and before you know it, you'll become a pro. If you want to hear my own show, it is Wealth Formula Podcast. It's Wealth Formula Podcast, and the URL, the domain name is wealthformula.com. That's the blog, but mostly it's just the podcast. On that website, there are a lot of basic financial information, and just for people who are just getting started, who don't even know what a mortgage is, that kind of thing. There's advanced financial stuff. So, and a lot of the show is about mindset, and we also interview a lot of people who are offering potential investments, etc. So hopefully it'll be useful to some people.
I'm a subscriber. It's very unique content you have there. I mean, there's so much. iTunes is just inundated with all these, people trying to sell something or some kind of sales agenda. But you definitely got a lot more higher level concepts there. So I appreciate it. I left you a review, so.
Oh, thank you. I think you're the only review I have. I know I have a fair number of downloads, but I never ask people for reviews or subscriptions. I probably should get the word out, but.
Yeah, that's what those internet marketers say. You need to ask for it.
Yeah, right. Exactly.
All right, Buck, but I know you probably gotta hang out with the kids. It's the weekend, so I know you woke up early to do this interview with me, so appreciate that.
Yeah, thanks for having me.
Thanks everybody for listening. This is Simple Passive Cashflow Podcast. Please leave a review. Thanks. Bye.
Thank you for listening to the Wealth Formula Podcast. Visit us on the web at wealthformula.com. The information contained in this podcast are opinions, not fact. As always, consult your own financial team before making any investment. See you next time.